How are we doing, everybody in cyber world? Stephen Palmieri coming to you here today. And for those of you guys who know me, thank you for following me. And for those of you who don't know me, my team and I, we help folks improve their finances by raising their credit scores, lowering their taxes, and improving and fixing their accounting processes. And today, I want to talk about how do you get a mortgage if you are self-employed and that topic in general. A lot of folks watching this, you may be self-employed. Either you have a small business that you work full time, such as an S corp, or really a true sole proprietorship, which is basically called like a Schedule C on your tax return. And the issue that a lot of sole proprietors, small business owners have is that, well, they don't necessarily pay themselves W-2 payroll wages. The issue with that really comes in from the underwriting lender perspective. And if you've ever tried to get a mortgage and you're self-employed, mortgage companies typically, I say typically because that atypical is what's going to lead us to the rest of this little segment here, but they typically want to have conforming loans where they check a few check boxes. They know what your income is going to be. You've got some sort of job stability, which of course we all know is kind of crazy because you can lose your job tomorrow for any number of reasons. You can get fired, you can get laid off, you can get sick, you can get injured. All of those things happen. But what they look for is, what is your income on your W-2? Is it $60,000? Is it $100,000? And then what is your debt? And then what are the ratios? How can I take your income and your ratios and then plug you into some sort of a loan to value calculation? Well, the issue, if you are self-employed and you don't necessarily pay yourself W-2, well, before we get into the issue, let's just talk about that real quick, how that happens. So if you're a true self-employed sole proprietor, you pay yourself as you basically, your business is a Schedule C, a true sole proprietorship, not being taxed by the IRS as an S corp, a partnership, or anything else. You really don't even want to pay yourself with a W-2, and you're not supposed to pay yourself with a W-2. And the reason is because then you would double dip on your payroll taxes. When you are self-employed, there is a tax when you fill out your tax return, your 1040, your personal return flowing down from your Schedule C. There's a tax called a self-employment tax, and this tax pays for Social Security and Medicare. Okay. So, which is the same part of the tax as if you had a W-2 paycheck, right? If you have a W-2 paycheck, you look at your tax breakout numbers. You've got your income tax, and then of course you've got Social Security and Medicare wage payout as well. If you're self-employed, you should not pay yourself W-2 wages, in fact, because then you're going to be paying yourself, so you're going to be taking out Social Security and Medicare in the W-2 when the payroll company does it. And then at the end of the year, when you file your taxes, you're going to have to pay that self-employment tax anyway, which is basically like double funding Social Security and Medicare. So that's how it can happen to where if you're a sole proprietorship, you don't pay yourself because you're not supposed to pay yourself because you're a sole proprietorship. And of course, if you're something like an S corporation, you can take money out as distributions. You're supposed to, under the IRS guidelines, pay yourself what they call a reasonable compensation for your involvement with the company. That should be W-2 wages, but still, nonetheless, you could pull money out as distributions, and that is not W-2, okay? So that's the issue. That's how we get to where we're a small business owner and we're self-employed, small business owner of some sort, and we don't have like a W-2, right? So when you go to apply for a mortgage, they're going to want to see, what is your wages and what is your adjusted gross income and how can they jam you into a box, create a few calculations and figure out where you score out at loan to value wise. Okay. Well, the issue with that is a lot of self-employed folks go to regular mortgage folks and, with regular loan products, and they are told, well, hey, you need more income because, although obviously clearly you've been surviving as a small business owner, you don't fit within our box. And so, it looks like you don't make a whole lot of money on paper, even though obviously you're surviving. And so that's welcome to the world of small business sole proprietorship. So they say, hey, you need more income because we can't get your loan done this way. And if you're a true sole proprietorship, what have we just talked about? Well, you don't want to pay yourself a W-2 because now you're double paying Social Security and Medicare. But you may get the advice from the lender, well, hey, we've got a look back period of say 6 months, if that's what it is. So why don't you start paying yourself a W-2, come back to me in 6 months. Okay, well, that's a workaround. I mean, you could do that if you want to go back to that lender and do that. And, the opportunity cost there is, hey, well, you're going to go ahead and pay payroll taxes in addition to the self-employment taxes. But you know what? Now you can pay yourself a fat, juicy W-2 for 6 months. Go back to him, wait 6 months. Hopefully you qualify. That's one workaround. Okay, but that's not really very appealing, is it? Because we have to pay ourselves what we would not normally be doing. We have to double pay taxes, and we have to wait at least 6 months with no guarantees. Sometimes they say, hey, can you get your tax return amended? And maybe some of these business expenses that you wrote off, which are reducing the profitability of your company, which is reducing your taxes, which is reducing your adjusted gross income, could you maybe amend your tax return and just, maybe like $30,000 or $40,000 of these expenses, which are true business expenses, just ignore them. So you basically you amend your tax return, your Schedule C, so that your profitability has increased by $40,000. Now, I'm not going to say that the IRS would probably have a problem with this because you now you're reporting $40,000 more in taxable income. And so they're going to make more money on you. But of course, it still would not be an accurate tax return, most probably, how you look at it. If you took $40,000 of expenses and amended your tax return and just ignored those expenses, basically, okay, the $40,000 we paid on marketing and whatever, we're not going to consider it a business expense, right? So now that increases the profitability of your company by $40,000 in that example, which flows through, would increase your adjusted gross income. Okay, so that scenario happens where, they're like, hey, why don't you amend your tax return, increase your profitability? Now, we definitely don't want to talk about like saying you made more sales, okay? But I mean, if you're going to say, well, these $40,000 in expenses, we're just going to ignore them. Again, I mean, the IRS doesn't get harmed in doing that because you're going to pay more taxes, okay? But I don't recommend doing that either. I recommend the option we're going to talk about here. And there's bank statement lenders in this world who have loan products specifically for small business owners and entrepreneurs. And so part of the issue may not be you, it just may be the sandbox that you're playing in, right? You're playing in the sandbox of the conventional lender. And I've got a lot of referral partners who are lenders. I love you all. But we're out here to put out the information, right? There's a tool for every job. And if you're self-employed and your lender's telling you, hey, we can't get the deal done with your income, you want to either pay yourself a salary and wait 6 months and pray, or do you want to go back and amend a tax return and eliminate a whole category of expenses, which raises your profit, which means you're now going to have to pay taxes for last year to the IRS. If those are the options you're getting, you want to look at the third option, right? The third option is find a lender that will do bank statement loans. What they're going to want in general is the bank statement that has the majority of your cash flow, and it can be your business bank account. And these lenders have these programs, and they have their own internal guidelines where they will run your bank statements through there and essentially underwrite you. Now, I mean, that being said, you still need to have a decent credit score. You've got to be cash flowing. You can't have poor credit, NSF bounced, overdraft fees hitting your bank all day, every day, right? But I mean, look, if you're in business and you're cash flowing and, you do have a sustainable business, your issue just is you don't have provable income. Well, bank statement lenders can get the job done, all other things being equal with your scenario. Now, the rate is going to be a little bit higher, but as we can see now versus last year versus 4 years ago, rates go up, rates go down. whatever, right? Get the loan, do the deal with a legitimate product, loan product. And at some point in time, if something changes with your scenario down the road, go ahead and refinance it, right? These loans should be refinanceable. And so, that being said, I wanted to share that with you all because that scenario comes across my desk from time to time when people are coming to me to help them fix their finances. You know, usually it's not necessarily on the credit repair side because their credit typically is good enough. Usually at that point in time, it comes down to, like the tax side. Hey, they want to come to me to help them amend a tax return. And I'm like, well, I mean, did you have more sales? No. So do you really want to reduce your profit? Reduce your expenses and increase your net income and write a big ass check to the IRS? And I actually have never had a client tell me that they want to do that. And I'm like, hey, there's other loan products out there. Would you like a referral to somebody? So that being said, if this is a situation that you're in, I'm happy to talk to you. I do not do loans. Certainly, I've got referral partners. I can send you over to somebody. I get nothing for the deal. But if that's your deal, if your deal is that though, you're still needing to get your tax returns caught up in order to get your loan, and then figuring out the right loan product is just, a secondary issue, reach out to me. That's what my team and we do all day long is we help you to improve your credit, do your taxes, get caught up, lower your taxes, and improve your accounting processes. So that being said, hopefully this information, you can do something with it, help yourself, help a friend. And I want you to remember one thing, guys. Fix your finances and improve your life. I will see all of you on the next show. You all take care.